Welcome to the XY Adviser podcast. To join a global community of financial advisors sharing and learning with one another to drive the positive evolution of financial advice, head to xyadviser.com. G'day, how's it going? What do you know? Striker Light Clayton here from XY Adviser, and we're today catching up with our CFO, Ben Andrews. What's happening, mate?
Mate, well, quite a lot, really. Not a lot outside of the house.
That's true.
But, mate, just currently deciding whether I'm going to grow out the locks and do the whole Jared Leto or maybe just shave it all off and go Jason Statham. But all I know is that at the end of it, I'm definitely going to look nowhere near as good as those two blokes.
That goes without saying. Oh goodness! Well, I've gone the Statham look. I call it the quarantine cut. You can't go hang out with a hairdresser at the moment. So just pull the razor out. Now, a lot going on in terms of economic situations, viral situations, and economic stimulus situations. And it's a weird time, whereas it's not a systemic economic issue, notwithstanding the problems of our entire post-Keynesian economic system, but there's nothing pertinently systemically wrong with the financial system at the moment which is causing a downturn. It's this strange, shall we call it, viral, silent, invisible assassin that's out there killing off old people left, right, and center. It's completely shut down our economy, right? And so the government's come out a handful of times every bloody week. There's a new thing that they're doing. And before the podcast started, we were talking about $150 billion, which I haven't looked at any of the facts on this, but it sounds like the biggest piece of stimulus this country's ever done. Well, and it's astronomical, and who knows what that's going to do for our future. But certainly, I guess we're going to have to survive the next 6 to 12, potentially 18 months. So it's a big topic, mate. And you're I looked at the Rolodex, and you were the most qualified to talk on this out of anyone that I know. So certainly anyone in the XY team. So, mate, thanks for coming on.
No, look, my pleasure, mate. Thank you for the opportunity. Look, I hope we can add some value to the community. I'm looking forward to providing another perspective on the current events. And you're spot on, mate. There is a lot of noise out there on these government stimulus packages, and we've just been trying to do our best to kind of cut through that a bit because you can easily get caught up in it a lot, and there's certainly plenty of misinformation out there, completely unintentional. But we're trying to just make sure people are well informed. A lot of our time's been focused on helping certain clients keep the lights on, which has been so good so far. And there certainly is a big focus on these stimulus and benefits, and there should be. However, we're making sure that all the business owners that we assist and the executive team in those businesses are turning their heads to what they can do beyond either waiting for the government or just maximising these benefits. Those things go without saying. Maximising the stimulus that's available. The legal matter, of course, it goes without saying, but what are the other things that we can do as well? Yeah,
and because you're at Air Accounting, and what are you talking to your clients like XY? What are you telling them? Like how are we meant to navigate this this crazy situation we find ourselves in? What's kind of the key things that you're talking to your clients about?
Look, man, I think first of all is just taking a second to obviously see how they are. I think mindset is incredibly important in a situation like this. It certainly impacts your decision making, and it's contagious. If you approach this with a negative mindset, it's going to have an impact on your family, your staff, and your clients. That it's important going to this and viewing that COVID-19 is an insignificant event. And what will eventually be history, an event that your business is going to need to adapt to and to overcome. As you said before, mate, this is having it's not necessarily a financial problem that's caused this. But it is still a significant event, and it's going to have a significant impact financially. 10 years ago, we had the GFC, and there was an enormous impact as a result of that. And this isn't me making direct comparisons, but simply saying that was a significant event, which we all had to overcome, and we're all here. And a big impact. For Australian SMEs was 10 years ago there was almost no help from the bank, a significant lack of access to capital. Where we're seeing probably a slightly different tune, at least in the short term right now. But most businesses adapted. Perhaps we'll find soon some might have adapted enough. But look, definitely the mindset, just firstly focusing on the people, mate, just making sure they're okay, and making sure they know that we're here to help. Because at the end of the day, when we look at all this, that's what's most important. We've got a bit of a flight plan that we've been running our clients through March and April. That's mostly been focused on, or now leading into April at the time of this podcast. But that's really focusing on the people, the staff and the clients first, and then kind of looking at the short-term plan for the business, and what we're kind of calling intensive care. And then now as we get into April, focusing a little bit more on the medium term in terms of the business recovery.
Because, I know you used to work out of a financial planning office, and I know you recommend, individual sort of clients to financial planners rather than taking them on individually. So I know you're quite familiar with financial planning as a profession. For the advisors out there and who have a huge responsibility, in terms of their clients. So you're saying the first things first, make sure that their clients are in a good headspace, and I'll sort of mirror that as well. I don't think I've been as busy with commercial sort of activities than I've been literally in the last couple of weeks. It's the general consensus from what I can find, and this is in professional land, right? So it's obviously going to be different in the hospitality and retail sectors where there's no refuge from this. But in the professional sector, it's kind of like, we can work just shifting from a tall building into your house, and the technology is there to make things work. And people are typically in a somewhat of a resilient attitude, I think. It's our responsibility to keep the GDP ticking over. It's our responsibility to keep over-delivering to our clients. It's our responsibility to, I guess, collectively, especially for us that work in finance, to ensure that there is a working society to come back to with an operating financial system. And it's all of us responsible and holding up, with, I guess, our attitude to work and our desire to keep things keeping on, as long as we can start, keep paying bills, and as long as we can still keep doing new revenue. And obviously there's going to be some struggles, and you're going to lose some clients, but undoubtedly you're going to gain some clients as well, because, in situations like this, the opportunity is just as big as the problem. And the more advisors that I speak to, the more I'm realizing that everyone's losing clients. Next to everyone, especially if you're charging, fees outside of super and someone loses their job. Advice is one of the first things to go. But at the same time, a lot of people are getting hired. We've seen a few people just through XY get jobs recently because there's too much work and they've had to put on extra people. So with all this change, it does increase the need for advice. But it's a really good first step in saying, make sure your client's mindset is in a positive frame of mind.
And not just the clients, mate, but your own. As the business owner, you've got a lot of people relying on yourself. Like I said, family, but also your staff members who will be looking to you for leadership. But absolutely your clients as well. You're no doubt a very important person in their life, particularly in this time. More than most. Contact them, let them know you're here for help. Keep them updated on events, whether it's regards to the stimulus or to the whatever strategy you have in place with them. because ultimately it's going to be a lot easier to close the back door than to push through the front door and sign on new clients. The first step. It's quite easy to become reactive in times like these. Everyone's going to look up. We haven't really had to deal with this for quite some time, and it can become quite reactive. And you might think, well, if I reach out to everyone, it's just going to result in more questions. But the first, keep in mind, your client's going to be looking at their outgoings as well. And if they look down at a line item and say, I haven't heard from this person in a while, that might be the first thing that comes to their mind. That's absolutely important. It's very important. And also with your staff, like I said, are they healthy? Are they healthy mentally, not just physically? And how are their families? Because it might be that they're in a good spot. You might be thinking, hey, look, I've still got work for these people. They're able to work from home, but perhaps it's their spouse that's unable to, and maybe that's causing a bit of a pressure. And I know you mentioned before that we are quite fortunate in professional services to be able to work from home, a lot more seamlessly than other industries and professions. But it can be easy to fall into that trap a little bit as well. We're quite fortunate that we've always kind of had a few days working from home. All staff have that set up at home ready to go and use it already. And again, it's quite easy to fall into the trap that, okay, well, if we're in professional services, well, then of course we can just move staff home and they'll be able to work from home and jump on a laptop. But it's important to just take a second and say, well, how do they feel about that? Have they done it before? If they haven't done it before, it might be easy to assume that they'll be, completely know exactly how to go about it. Do they have the right equipment? Do they have another monitor? It's going to, no doubt, improve productivity. Make sure that they're comfortable in that working from home environment.
How many different stimulus packages has the government already announced?
Mate, we're currently at federal. We're at 3. Although there is a range of state stimulus packages that have also been announced, which helps, which is great, but then also does add a little bit to the confusion. But we're at 3. Although perhaps it's best to look at the first 2 as a collective. Stimulus packages 1 and 2, as they were legislated together, and the bulk of the detail was released together. And then stimulus package number 3, which is predominantly this JobKeeper payment, is still yet to be legislated. So we've got confirmation as of last night that will be put before Parliament on the 8th of April, and everyone expects that will be passed quite promptly, and then the full detail will be there.
I'm just sitting here thinking, I mean, will House be even, and Senate, will it even be able to be, in motion or whatever it's called? Like, how are they all going to get together and sit in that room, or are they going to do it over Zoom, or what's going on here?
Well, my understanding, and look, I'm not necessarily an expert on it. My understanding is it's similar to a board of directors. They do need a quorum, and I believe they ensure that they have. That's potentially why it's taking a little bit of time, although I suspect drafting the legislation will be a bit tricky as well. But they've got to ensure they have a minimum number of representatives there to pass the legislation. And I think that's why they've said they can do that by Wednesday, because obviously we've got to be quite careful. We get, I think it's 151 plus the Senate of those, rule makers, for want of a better phrase, in the same room, and one of them, infects everyone else. It could be a bit of a problem.
That's what I was sitting here thinking about. Imagine that, just all of the MPs from around Australia, just all contagious COVID, walking around zombies. That would be a disaster, wouldn't it? Okay, cool. So let's assume for a moment that this tranche 3 works and goes ahead. Then what are the financial planners out there that are, they got their own business, and they may even be giving advice to their own business clients, not tax advice, but also, as a financial planner, you're often there to support all financial decisions. So what are the key things to be thinking about in terms of what is easiest available in terms of stimulus from the government?
Look, in terms of stimulus from the government, certainly in the in that second, or I should say, in the combined first and second stimulus package, certainly getting access to that cash flow booster is going to be one of the easier ones to access. If you do have if you do already have staff members on the payroll, there is a tax-free cash flow support booster essentially of a minimum of $20,000 up to $100,000. And that's ultimately going to be facilitated through the BAS lodgement. It's worth noting that the first payment, which could be up to $50,000, and it is based on your withholding levels on your staff's salaries, won't be available won't be released until the 20th of April.
Right.
Okay. Another one that's certainly going to help from a cash flow point of view, which I believe the two measures that are probably most relevant to the financial planning profession is going to be the tax-free cash flow booster, and also this JobKeeper payment, which should be legislated on Wednesday. And that's a significant stimulus measure, which is ultimately going to be $1,500 before tax every fortnight for all your eligible employees.
Right. What's an eligible employee?
Well, there we go. So, look, in most cases, it's pretty much all full-time staff members. Where it does get a little bit, we have to get into a little bit more of the actual detail is with the casuals. So, first of all, it's got to be an employee that was employed with a relevant employer at the 1st of March, and they're currently employed with the employer. At the time, obviously, to receive this payment. Now that includes, and this is what's great for a company such as Qantas, for example, is that does include staff members who have been stood down, so they may still actually be employees of the company. They're unable to receive remuneration because there is no work, but they are still employees. They will still, provided they meet other criteria, will be eligible for that payment. And they've even given the chance for employers who may have moved quickly with all the right intentions and to try and save a business, or perhaps the business was ceasing to continue to trade, and they've terminated those employees but have rehired them as a result of this package. Those will also be eligible. So if for whatever reason you were no longer working for that employer and they've now reached out, or it might be worth yourself reaching out and saying, hey, I think I'd be eligible for this, you would still receive that $1,500 JobKeeper payment every fortnight. Just in terms of casuals, the key thing is long-term casuals. So yes, full-time will be eligible, part-time will be eligible, and then for casuals, you need to be employed on a regular basis for 12 months, as at the 1st of March this year.
Yeah, right. What about, does contractors fit in here at all?
Look, they have mentioned that contractors will be eligible, but they haven't actually released how they will be eligible, and this is the detail that we're all waiting for in this Wednesday's legislation. I suspect, and again, don't hold me to this, but I suspect that how they will likely monitor that is if you are a contractor and kind of register for this payment, you'll effectively be assessed as a business in yourself. So rather than it being paid to your employer because you don't have an employer, you are self-employed technically as a contractor. Your ABN, so to speak, will register with the government, and you'll say, hey, look, I'm a contractor, I'm still on my own here, and they'll likely deem me eligible for the JobKeeper payment, but the detail will come on Wednesday.
Yeah, right. Okay. What else should advisors be doing? These practice owners. So let's assume, the mindset is positive. What else? What are you telling your clients? What are you telling XY? How do we navigate what's going on beyond just making sure we're in a good headspace?
Yeah, look, absolutely. Look, provided the team around you strong and we're all in like I said, it was a good headspace. We then start looking at and look, we've identified how we're going to get the most out of the stimulus. We're kind of breaking this up into more short-term things to look at, which we'll probably deal with first. You can forgive me, I am an accountant, so I will kind of address these probably in line with how you would look at these on a balance sheet. So, first of all, with the cash, and the cash that is available to you, and to use I can hear the collective eye roll as I say, cash is king. But in these uncertain times, over the next, certainly the next 3 to 6 months and potentially beyond there, we want to shore up as much cash as possible. But to an extent, and this is just where we're kind of thinking outside the square a bit. If cash isn't a problem for your business, okay, and for the bulk of people, cash flow is going to be a significant issue in these uncertain times. But if for whatever reason you are in a strong cash position or do have access to significant cash flow, then think about using this to negotiate more favorable pricing with your suppliers. So if you're in a position where you've got what everyone wants, so to speak, well, perhaps instead of asking for extended payment terms, you go to your supplier and say, well, look, I'll pay you right now, but what can you do on the pricing? It's just another way to look at it as well. If it is not something to have to worry about, don't just dismiss it out of hand. It might be very valuable for others, and you can turn it into some value for your business. Look, from a financial planning, perhaps a little bit less relevant, but in terms of your clients owing you money, or what we kind of call debtors, people that do owe you money. Look, we want to be making sure payment is up front. If it isn't already, I suspect for most of you it would be. And certainly, if with new clients on board, if we can move towards a system where it is more of a retainer model to ensure that you have an easier ability to forecast cash flow. If you're not doing so already, then we want to look at all possibilities to do so. It will allow you to go into April, for example, or we're just in April now, and go, I'm very confident in the cash that's going to hit this bank account, or more confident, I should say, just based on knowing that there's a range of direct debits out there that'll move the cash into your bank account for services rendered. So another one here that I do have here, but look, it's less relevant for financial planners in terms of things like fixed assets and inventory. But it might be relevant if you've just bought a significant asset with cash recently, and this could be a motor vehicle, for example. You might go, oh, what I should have gotten a shuttle mortgage, or should have got some finance around that, and that would have assisted with my cash flow. Well, there's always a way to look out there and look at potentially selling that asset and getting it leased back. Just unlocks a bunch of cash flow, and instead of holding on to an asset that is fairly liquid, we can get a bunch of cash that'll help you through the short time, and then you can pay that back over a number of months.
Who does that? I've never heard of that before.
I can certainly if you can certainly put you in touch with people if you're interested, or anyone here is interested. But it's just another way of looking, thinking a bit outside the square. There are people that do that.
Yeah, right.
So just way of unlocking cash flow, turning illiquid assets without losing them into cash.
Interesting.
Certainly. Then going on to the other side of it, looking at things like debt. I'm sure a lot of people, if they haven't already, I highly recommend you speak to any lenders that you have with your term loans, with your banks. Pretty much all banks are providing 6-month suspension of loans. Keep in mind the interest is still accruing, but you won't have to make payments for 6 months, and that's for anything up to a $10 million facility. That's huge. It will certainly assist in the short term in this intensive care period with cash flow. But just keep in mind, this isn't something that's automatic. It is the bank. You will have to ask. You will have to say please. Yeah. But you'll find that they're actually quite cooperative. Then don't forget things like, again, vehicle leases that you might have on a vehicle. Reach out to those lenders as well and see what they can do. Same thing with online lenders. A bit less flexible, we found. You have Prospers and your Ondex, but they're still worth negotiating. I can keep going with a few more if you like.
Well, I was actually going to ask about this. I've sort of read and heard a little bit in terms of rent. I've heard both sides of the coin. Through my self-managed super fund with a couple of buddies, I've got a property, so I'm a landlord on that side of the ledger. And then, in Sydney, I rent my apartment. So are you seeing, and then if you consider sort of office rents and people can't go into, say, WeWork or where we are at the hub, what's sort of the general consensus in terms of asking for a rent reduction?
Look, that's a very, very relevant question, Clayton. And there's a few things on that. First of all, I believe it was late last week. Scott Morrison, the Prime Minister, announced a memoriam on these payments, and effectively, what that announcement was, similar to the stimulus, is that he's saying that the state, it is a state issue, so the federal government can't do anything about it. And the states, in their own way, because they all have different acts, around this, and New South Wales Residential Tenancies Act 2010, I think it is, but different states have their own different acts. But he said that that's what their intention will be. Now, I don't believe, as at this date, at the time of this podcast that they have actually acted on that. Now, I know that they've made moves to be able to do so, and I don't think that's an indication that they won't. It's just that I believe that legally right now you should seek, a property lawyer's advice on this, but don't just go off this. But my understanding is that nothing has concrete happened on that or on that legislation or to provide that protection for 6 months. But there's all the noise that it will.
Now, what does protection mean? As in, like, the government's going to pay your rent, or as in, if you don't pay your rent, it won't stay on your permanent file, or what? I don't actually know what a memoriam is.
So it's effectively look, what they're looking at doing right now, or what the noise is so far, and the ones that we seem to be a bit more likely is tying back to this 6 month period that all the governments are in unison on. That everything needs to be thought of in a minimum 6 months, and any changes we make, that you would not be evicted for payment of rent. Hopefully not being hit with penalty interest as a result of lack of rent. Now, this doesn't mean that the rent's wiped and you'd never pay it, but that's what I believe that they're looking for at a minimum is just so that people cannot be kicked out of their house during this next 6 months. That businesses can't just rock up and have a lock on the shed. And saying pay the rent, and then they can't trade. I believe it's just for a bit of a 6 month reprieve. Look, what I have seen though, regardless of what is actually legislated and what at this point in time, is I've seen both sides of the coin. Look, fortunately, more good than bad. I've seen a lot of landlords, commercially and residentially, willing to help. In the most part on residential side of things, I've seen usually a range of somewhere between 20 and 30% reductions in rent. I would, and commercially similar as well. What I would strongly urge is to give yourself some certainty. We've had some landlords come back, and whether it's because they're not genuine or because they themselves don't want to agree to something too onerous, but the kind of seeing how things go month by month, I can understand that on face value. However, as a business, and even as a household, we need that certainty to be able to forecast ahead, to be able to budget ahead. We can't go, if we look at month to month, we'll constantly be reactive and just making short-term business decisions. If we can know that at least the next 3 months, there is going to be rent-free, not just a deferral of rent, but rent-free for the next 3 months, we can at least have the next certainty over the next quarter and finish the financial year with some certainty. And that's what I'd be, in most cases, I'd be looking to lock in a period that both sides agree on, make sure that it's rent-free, or that make sure that you're aware that if it's not rent-free, that it's not, and you will have to pay it later on. And in terms of negotiation, look, if you're towards the end of the lease, ultimately that landlord or property owner is going to be thinking, okay, this lease ends in 3 months or 2 months, or whatever it might be. What are my chances of being able to lock in another tenant? And what will rent be? What will market rent be when I'm able to lock that person in? Yeah,
that's a really good point. All right, so moving on from cash, what else do we look at?
Look, one of the things, and this ties in a bit with the stimulus, and it is relevant for all businesses. The ATO, in terms of any sort of BAS liabilities, income tax liabilities, get onto the ATO, or make sure your accountant's onto the ATO and is making it aware that if you are unable to make payments, or even if you do believe you're going to need to shore up a bit of cash because of the uncertain times ahead, start the conversation with the ATO now. It's certainly going to help you out in the long run, and negotiate a payment plan that's appropriate to your business. I really want to underline that last point. There's no point going to the ATO and just saying, hey, give me 2 months, I can pay you, if you don't think you're going to be able to pay them. Because ultimately, when that time comes, they're going to view that as you've defaulted on your payment plan, and you're going to have to renegotiate it again and set up a new one. We want to look ahead, and this is the time to put a realistic plan in place. If you think you're going to need 12 months to pay it off, then say, look, I've run the numbers, I've looked ahead, it's going to take me 12 months to pay this off. And another thing, and this is part of the stimulus as well, is that if you are a business and a profitable business that's been paying income tax installments since 1 July 2019, so that's for the September 2019 quarter, July to September, and October to December 2019, and you've paid income tax installments on that profit, you will be, and you believe that your business is going to be affected by this and not going to ramp up even more, then you can go out to the ATO and say, hey, I need those installments back. And that can be done as easy as in your March BAS right now. You can go to them and say, or you can get your accountant to go to the ATO and say, look, I paid you that tax in advance. Business was doing well. Now I'm really uncertain. I need that back. I need the cash flow to make sure my business continues to succeed.
Yeah, right.
So that's a good one there as well. Look, in terms of, we talked about, dealing with your customers, but also with your suppliers. Obviously landlords, one of your suppliers in business. But have the conversation with them. Look to negotiate credit terms. It's going to be an interesting discussion. They're going to be trying to reduce them. You're going to be trying to increase them. But have the discussion. If you don't ask for something, that's one way to guarantee you'll never get it. And probably on the employee side as well, if you haven't already, please, if you have any permanent staff, have a look at what your exposure is from the employee entitlements. That's predominantly annual leave and long service leave. In the event that for whatever reason you do have to stand down staff over the coming months, or perhaps let them go. Well, what is your actual liability? We find a lot of small and medium businesses don't regularly look at that. They don't recognise their entitlements on their monthly reporting or even their annual reporting, and it's just this hidden liability on the balance sheet, which will all too quickly pop up should something significant happen.
Yeah, and I remember talking about that once with you, and essentially you take the whole package and then times it by 110%, right? That's a really good rule of thumb.
Well, yeah, I mean, our conversation there was in terms of we look at one of the accidental mistakes when negotiating employee pay can be if we look at we're going to pay someone $100,000 and that's their package. Or sorry, I should say that's their salary, and there can be a miscommunication where the employee might believe that's 100,000 plus super. And the business owner might think, oh, that's 100,000 inclusive. But then the next step is also, well, if you're converting someone from a contractor or a casual worker to an employee, just keep in mind that there's actually a cost there for entitlements as well. I mean, and they're completely entitled to it. There's no way we can reduce that. But just to make sure, you're going to have, average, if they take all their leave every year, then 1 month they won't be there. But you will be paying for that. And that's just part of having a permanent staff member. Yeah.
Awesome, man. Well, what else? Because we've covered some really good tips and tricks there. What's your sense? Like being in the position that you're obviously having many conversations. What's your sense? What's your finger on the pulse? How do you think the business world, in as far as you're exposed to it, how do you think people are responding? Do you see, if you sort of look 6 months down the track, what do you think is going to happen?
Well, that's the big question. Look, I think a lot of businesses have already been significantly impacted by this. I think there's going to be some impact that's going to be felt by all business. And I think there's definitely going to be industries that are going to be unfortunately hit harder than others. What I can say is, and look, I talked about the GFC briefly before, and I think even yourself briefly, and the significant event in history. But this is a pandemic, and there's a slight of a unique twist with COVID-19 compared to a pandemic compared to other significant events that have happened, and that is how quickly that the businesses have been impacted by this event. Businesses are always going to be required to adapt and to change. And I can throw out the internet as an example there, but that's happening over decades. And some might have been impacted quicker than others, but right now this is global. With internet and globalization, open borders, economic interdependence, we're all going to be impacted by this very quickly, and we already have. We don't just have a requirement like we have done with other significant events in recent times to adapt, but we've got a requirement to adapt quickly. And I suppose my point about that is all businesses are going to have to change. We are all going to have to adapt. Those that do so quickly and correctly will come out of the other side of this better than they went in. When we compare it to a whole, how we react by this event is all, and moving forward is all going to define our business. It's about looking at this as I look back at when the GFC was going on, and shortly thereafter, everyone's looking at analysing all these businesses and the ones that did well, what did they do right? Ones that did poorly, what did they do wrong? I think the businesses that kind of take a step back and go, how can we adapt to this? How can we change to this? We've got clients up in, for example, the gyms, right? The revenue overnight's been switched off essentially. Yep. So we're saying, okay, well, let's look at the premises. Initially, we thought we could just adhere to the social distancing and we'd be all right. We just make sure that everyone didn't go anywhere near each other, but that certainly is not the case now. But there's still the ability to do personal training sessions, and there's still plenty of members that'll still want to do that. Whether they rock up to the gym and they're the only person in there with the PT, and everyone's allocated a time slot. Whether it's potentially having those sessions at home. It depends on the type of equipment involved, of course. But we've even got glazing companies who do hotels and significant projects, and they're unable to do so now for a couple of big reasons. But now they're going around they've identified businesses who are doing well. Pharmacists are doing quite well. However, they're quite exposed. They've got a lot of sick people coming into the pharmacy. They might be able to wear face masks, but is that enough? And now one of our clients, they're very proud of them for them to have pivoted, and now they're installing effectively shields at all these pharmacists between the counter and the patient. Still wear the face mask, but that's why they have it in hospitals. So hang on, we have a lot of perspex, we have a lot of glass. Let's just start installing that in all these pharmacists. Pharmacists are more than happy to pay for it because they want to protect their staff. And they want to be able to help people, and they want to be able to do it in a safe manner, and that's helped out there. So we've seen, how this will impact your business will be how willing and you are to adapt, and how quickly you're able to adapt.
Yeah, it's a really good point. And I was at uni, sort of just coming out of uni as the GFC was happening. I was tax accounting at the same time, or I should say at the time, and I've heard sort of, over the last, almost, it's about 12, 13 years since it happened. I heard during that time of all the success stories that came out of that time, where we were doing one thing and then GFC happened and then we started doing this thing and then it took off. And the opportunity, I think, to really stand out, adapt, and be different at a time where people, where the stress, it's at moments like this where the power balances go up in the air. It's for those that want to sort of reach out and grab what's available, bend, be uncomfortable, and sort of get on top of the best, ways to do things, we can actually come out a stronger business. So I really do hope, that people sort of take that advice, take that. I mean, even us at XY, right? Like, where we do 2 huge tours. Well, they're huge to us. We do 2 huge tours a year of events. So, which means we end up doing 12 events per year. And we already had deposits paid here, and we had sponsors involved, and, speakers, and it all had to change. And so we've had to sort of re-engineer the whole thing, meaning that we're, next week we will we'll promote the digital event series that's coming out. And the crazy thing is, we've now got 1, potentially 2, like big name speakers for this event. And the reason is because Michael Back gave me a call, and he goes, mate, the people that you'd want to speak at your conference all of a sudden are now available. And I was like, that's a really, really good point. So there are opportunities, because everyone's plans have now changed, but there are opportunities now to reach out and sort of change some things, adapt. And look, it's a scary time, but I'm sort of walking into this position being like, I'm trying to find the positives in there. And I'm pretty excited to see where we can take XY over the next 6 months. That's very anecdotal, but I took the advice from someone I respect, Michael Back, and hopefully people that are listening can continue taking that same advice, because it worked well for me, and undoubtedly it'll work well for you if you try it. Most importantly, how do people get in contact with you in the event that they want to reach out?
Mate, Look, by all means, I might either give me a call or shoot me an email. We've actually got a white paper on all this stimulus. It's probably up to date as of yesterday, so it might not include the recent announcement by New South Wales for those payments for affected businesses. But we'll soon add that in. But look, we can make that available to yourselves or
Awesome.
to all the members of XY, and then I'll have our details on that as well.
Cool.
Yeah, we'd love to help.
Awesome. All right, great. Mate, thank you so much. Undoubtedly, you're very busy, but it's awesome for you to come on. I mean, I've learned a lot, and hopefully, the advisors out there can continue pushing forward and build a big, strong business during this really tough time. Mate, thanks again. I appreciate it.
My pleasure, mate. All the best.
Cheers.